cause I'm a fool for your love.
What's up, my people? Javid Morgan coming to you with another production, aka Mr. Wall Street 100. Today I want to talk to you about what do banks do with your dollars. This is a very important question because at the end of the day, this is your money and you need your money to work for you, not against you. So what do the banks do with your money? First thing I'd like to share with you is a concept called the Rule of 72, right? It's simply the compounding of interest. How fast your debt doubles or how long it takes for your money to double. Why is this important? Because you need to know what's going on with your dollars so that way you can make an informed decision of where to put it, right? So the Rule of 72 was developed by Albert Einstein. He calls it the eighth wonder of the world. Whatever interest rate you're earning, if you divide that into 72, it tells you how long your money will double. If you earn 1%, you divide it into 72, it will take 72 years for 10 grand to double to 20. If you earn 3%, right, just 3, and you divide it into 72, it would take 24 years for your funds to double. If you're earning 17%, if you can, that means every 4 years and 2 months your money will double. Well, what's happening is this. When you deposit your funds in the bank, the reason why most people deposit and keep it there is because they believe one of two things. They either believe that it's safe, or they believe that it's protected, or they believe it's safe and protected. Well, did you know that the FDIC, they had to borrow money from Uncle Sam just to stay afloat? Google it. They also only insure you up to $250,000. So if you're one of those individuals and you have $1 million or $500,000 sitting at the bank, right, and it goes belly up, you can Google how many banks have gone out of business. Remember WAMU or COVID and around no more. So if the bank go belly up, guess what you're not earning, or you're not receiving back? $500,000 or $1 million. You're going to receive up to $250,000. So this is very important for you to know. So now when you deposit your funds at the bank lends out up to 90% of your funds, and they keep 10% on something that's called a reserve. By law, they have to do that. Now, what are they doing when they actually take that money and lend it out? They are charging individuals, if your credit ain't good, 4% on the average mortgage loan, right? They're charging you anywhere from 3% up to 25% on auto loans. I've seen auto loan interest rate at 25. I've seen them at 7. I've seen them at 10. I've seen them at 12. It fluctuates. So if your credit is not up to par, these lenders are charging high interest rates. So the average interest rate on a credit card is 17%. So if you take 17 again and you divide it into 72, it will give you 4.2 years. Now, they're doubling their money every 4.2 years, but they're only crediting your account 1%. So in 72 years, if you're lucky, right, you're only gonna get 10,000 double to 20 in 72 years. But is it really 20,000? Because now you have inflation that has grown over that period of time, and the cost of goods have gone up. So you're really still only back at 10,000. Also, you have inflation again growing over that same period of time. So you're not really making money. You're actually losing. You're actually in the negative. That's something to consider, right? The average interest rates that the banks credit nationally is 0.09. Now, when you take that and you divide that into 72, you will see that gives you 800 years. Now, if you knew that going into the bank, would you keep depositing your money there? Doesn't make sense to do it, right? But this is what's going down. Now, remember that you are one individual and the banks have thousands of people that actually save and keep their money there. So when they give you a credit card at 17% or a mortgage for, let's say, 4% for 30 years, and you bought, let's say, a $250,000 home and you pay on it for 30 years and you stay in that home for 30 years, at the end of 30 years, you spent almost $500,000 on a $250,000 house. Who won that money game? So you can see what's going on. Now you can understand why the banks have the biggest buildings in each city you go in. It's because most people don't speak money language. Money is being worked against them. So this is what the bank is doing with your funds. They take it, they lend it out back to you, your friends, your cousins, aunties, etc., and they're charging them 4% on the mortgage, 3 to 25% in auto loan. Average credit card anywhere, you're looking from anywhere from 10 upwards to 30%. Oh, and if you miss a payment on a credit card, it automatically goes up to the highest interest rate. So this is what's happening when people lend money or when people deposit money at the bank and the bank lends it out back to individuals and to yourself. So this is Javid Morgan, Mr. Wall Street 100. Email me if you'd like to learn more, or you can call me as well. I have all my information at the top of the video. Thank you for watching. Please like and share. Bless up.